So there is a theory I want to share with you today, and I have to warn you up front because this one is going to fundamentally change how you think about Russia, about America, about the global financial system, and about the money sitting in your bank account right now, because what Russia just did is not what the mainstream media is telling you it is, and the gap between the official story and what is actually happening is so large and so significant that once you see it, you genuinely cannot unsee it. There are two stories running simultaneously in the world right now, and the first story is the one you are being told every single day through news channels and financial media and government press releases about Russia being isolated, about American sanctions working, about the dollar being strong and dominant and unthreatened. And then there is the second story, which is the one that is actually happening underneath all of that official narrative. And the second story is about Russia doing something that no mainstream financial analyst wants to talk about honestly, which is exposing a secret about America's true financial condition that is so devastating and so large that if the average American actually understood it fully, it would change everything about how they think about their savings, their retirement, their investments, and their financial future. And that secret involves a number so large it is almost impossible to comprehend, which is $200 trillion. And Russia just put that number in front of the entire world and said, this is what America actually owes, and this is why the dollar system is ending, and this is why the global monetary order is being restructured right now, whether America wants it to be or not. My name is Andre Jick. Welcome back to the channel. Come for the finance and stay for geopolitics. Now, to understand why Russia exposing this $200 trillion secret is such a massive deal and why it matters so much for your personal financial situation, we need to start with what the secret actually is, because most Americans have heard that the U.S. national debt is around $36 trillion, and that number alone is alarming enough. But $36 trillion is not the real number, and every serious economist and every serious government official knows this, even if they never say it publicly with the clarity it deserves. The $36 trillion is only the official on-balance sheet debt, which is the money the U.S. government has explicitly borrowed by issuing treasury bonds and notes that show up in the official debt counter. But underneath that official number, there is an enormous additional layer of financial obligations that the U.S. government has made to its citizens that are just as real and just as binding as any treasury bond, but that do not show up in the official debt figure. And these are called unfunded liabilities, which include Social Security obligations to every American who has been promised retirement benefits, Medicare obligations to every American who has been promised health care and retirement, federal pension obligations to millions of government workers and military veterans, and various other long-term commitments. The government has made that it has collected no sufficient funding to actually honor, and when you add all of these unfunded liabilities to the official $36 trillion debt, the true total of what America has promised to pay but does not have the money to pay explodes to somewhere between $150 trillion and $220 trillion. Depending on which economist is doing the calculation and what discount rate they use. And this is the $200 trillion secret that Russia just exposed to the world. And the reason it is a secret is not because the numbers are hidden, but because nobody in official Washington ever stands up and says the true number out loud, because the true number is so large that saying it publicly would immediately trigger the kind of financial panic and loss of confidence in the dollar that the entire system depends on avoiding. Now let me explain exactly what Russia did and why the timing of it is so significant, because Russia did not just randomly decide to talk about America's debt problem out of nowhere, and the timing of Russia making this information central to its diplomatic and financial messaging is directly connected to the global monetary restructuring that is happening right now in 2025, which we have covered extensively on this channel. What Russia has been doing through its financial officials, through its central bank communications, through its statements at BRICS summits and bilateral meetings with China and other nations, is systematically building the case to the rest of the world that the dollar-based global financial system is built on a foundation that is mathematically impossible to sustain, and that every country in the world that holds dollar-denominated assets, including us treasury bonds, is holding an asset whose real value is being systematically destroyed by the inflation that America needs to generate in order to manage its impossible debt burden. Russia has been making this argument to China, to India, to Saudi Arabia, to Brazil, to every major emerging market economy that has been quietly reducing its dollar reserve holdings over the past several years, and the argument Russia is making is devastatingly simple, which is that America borrowed $200 trillion worth of promises using the exorbitant privilege of issuing the world's reserve currency, and now the only way America can manage that debt is through inflation, which means every dollar you hold is going to buy less and less over time. So why are you holding dollars when you could be holding gold or yuan or any asset that is not being deliberately inflated away? And here is what makes Russia's position so strategically powerful right now in 2025, which is that Russia is not just making an argument with words, but is backing that argument with action, because Russia, along with China, has been one of the most aggressive accumulators of physical gold reserves over the past decade, systematically replacing dollar-denominated assets in its reserve holdings with physical gold that cannot be sanctioned, cannot be frozen, cannot be inflated away, and cannot be weaponized against Russia by the American financial system the way dollar assets can be and were when America froze approximately $300 billion of Russian central bank reserves held in Western financial institutions after the Ukraine conflict began, which was a move that sent a shockwave through every central bank in the world, including those of countries that were nominally allied with America, because every central bank on earth suddenly realized that dollar reserves are not actually safe stores of value, but are instead assets that can be taken away from you by Washington at any moment for any geopolitical reason. And this realization accelerated the global de-dollarization trend that Russia has been promoting, and that is now visibly showing up in the data, with central banks around the world buying gold at the fastest pace in decades, while quietly reducing their treasury bond holdings. So Russia exposing America's $200 trillion secret is not just a rhetorical move, but is part of a coordinated long-term strategy to undermine confidence in the dollar system and accelerate the transition to a new multipolar monetary order where gold plays a much larger role, and where America's exorbitant privilege is significantly reduced. And the question you need to be asking yourself is, what does this mean for the dollars in your savings account? And the answer is deeply uncomfortable. Now let me connect Russia's exposure of America's $200 trillion secret to the broader global monetary transition that is unfolding right now, because these things are all connected, and understanding the connections is what allows you to see the full picture that mainstream financial media refuses to show you clearly. The connection starts with the Strait of Hormuz, which has been disrupted in 2025 following military confrontations involving the U.S., Israel, and Iran, creating a situation where approximately 20% of the world's daily oil supply is no longer flowing normally through that critical choke point. And while the official story says this will be resolved quickly, the data shows global oil inventories being drawn down to dangerous levels, with Bloomberg reporting operational stress levels approaching by June 2025 and actual floor levels by September, while Goldman Sachs commodity analysts note that parts of Europe and Asia are already in genuine shortage conditions right now. Not just supply deficits, but actual shortages where you cannot get the product you need. And the reason oil prices have not yet fully reflected this supply disruption is that someone is actively managing the price through financial instruments and reserve releases to buy time and prevent markets from pricing in what would otherwise be a catastrophic inflation spike that would force the Fed to raise interest rates, aggressively crushing the stock market and bond market while exposing the full fragility of America's $200 trillion debt position to the entire world all at once. Russia and China both understand this dynamic perfectly, and both benefit from the Strait staying closed longer because every day it stays closed is another day that America's financial system is under invisible stress that is building pressure toward the monetary restructuring negotiation that both Russia and China want to happen on their terms rather than America's terms, and this is why Trump flew to China with 18 of the most powerful CEOs in American history, including Elon Musk, Tim Cook, Jensen Huang, and Larry Fink from BlackRock, because the urgency created by the closed strait and the exposure of America's true debt position is forcing America to negotiate a new monetary deal from a position of weakness rather than strength. The deal being negotiated and the structure of what comes next connects directly to what happened in 1985 with the original Plaza Accord, which was a secret meeting at the Plaza Hotel in New York where America convinced Japan, France, West Germany, and the UK to intervene in currency markets to deliberately weaken the dollar against the Japanese yen, allowing America to become more competitive in manufacturing while Japan agreed to invest heavily in American factories and infrastructure. The problem was that when Japan's currency doubled in value almost overnight, its export economy seized up completely, and Japan spent the next 30 years in what economists call the lost decades, never fully recovering from what the Plaza Accord did to its financial system, and China studied this history extremely carefully and made a non-negotiable strategic decision that it would never allow the yuan to be revalued against the dollar the way the yen was revalued in 1985, because China watched Japan get financially destroyed by that currency manipulation and has absolutely no intention of repeating Japan's mistake. So the question for the current monetary restructuring is, how do you rebalance global trade and reduce America's unsustainable deficits without directly revaluing the yuan against the dollar? And the answer that the theory points to is gold, where instead of yuan revaluation, both sides allow the dollar to weaken against gold, making gold the mechanism that absorbs the monetary adjustment that needs to happen, with the U.S. marking its 8133 metric tons of gold reserves from the absurd 1973 book value of $42.22 per ounce to something approaching actual market value, which would dramatically improve America's official balance sheet overnight, while China's own massive and likely understated gold reserves would simultaneously explode in value, making China dramatically wealthier without any politically impossible yuan revaluation. And the market fingerprints of this deal already being in progress are clearly visible to anyone reading the data correctly, with the dollar declining against the yuan since late March 2025, despite the official narrative of American pressure on China. Chinese government bond yields falling while American yields rise, indicating investor confidence flowing toward China and away from America, and gold hitting all-time record prices in a sustained multi-month surge that goes far beyond normal inflation hedging behavior into territory that historically signals a fundamental monetary regime change being anticipated by the smart money. Now let me talk about what Russia exposing America's $200 trillion secret actually means for you personally, because all of this geopolitical and monetary analysis only matters in one real context, which is what it means for your money, your savings, and your financial future. And the honest answer is that the implications are large and mostly uncomfortable for people who are not positioned correctly. The core mechanism of everything happening right now is inflation, and inflation is not an accident or a policy mistake in this context, but is actually the only mathematically available solution to America's $200 trillion debt trap, because if you owe $200 trillion in promises made in today's dollars, the only way to make that burden manageable without an explicit and politically catastrophic default is to inflate the real value of those promises away over time by making the dollars you repay them with worth less than the dollars you borrowed in the first place. And this is a transfer of wealth that happens quietly and invisibly from the people who hold their savings in cash and dollar-denominated accounts to the people who own real and scarce assets that rise in nominal dollar terms as the dollar loses purchasing power. The critical insight that most people never fully internalize is that inflation does not hit everyone. equally, and the K-shaped economy that economists describe, where one group's wealth goes up while the other group's wealth goes down, is fundamentally a story about who owns real assets and who holds paper dollars, because if your savings are sitting in a bank account earning 4% or 5% annual interest while real inflation is running at 7% or 8%, you are losing purchasing power every single year and becoming poorer in real terms, even as the nominal number in your account slowly rises, while the person who owns gold sees the dollar price of their gold rise with inflation. The person who owns real estate sees the dollar value of their property rise. The person who owns productive businesses sees revenues rise in nominal terms, and the person who owns Bitcoin with its mathematically enforced cap of exactly 21 million coins sees the dollar price of those coins tend to rise in inflationary environments, because the supply is absolutely fixed while new dollars are continuously being created by a government managing a $200 trillion debt trap through the inflation mechanism. Now, I want to be clear that everything I have presented here is a theory built on real and verifiable data and documented historical patterns, but a theory nonetheless, and Russia's statements might be pure propaganda with no connection to an actual monetary restructuring. The Strait of Hormuz might reopen tomorrow, sending everything back to normal. The gold flows from America to China might have explanations completely unrelated to a Plaza Accord 2.0, and America's unfunded liabilities might be managed through future policy changes that make the $200 trillion number less relevant than it appears today, and I hold all of these possibilities genuinely in mind. But what I consistently observe is that whether this specific theory is exactly right or not, the directional conclusion across multiple scenarios points the same way, because the dollar is structurally likely to lose purchasing power over time. Inflation is likely to remain elevated above the Federal Reserve's targets for years to come. The $200 trillion debt burden is not going to be resolved through political willpower or fiscal austerity alone, and the assets that will preserve and grow real wealth in this environment are the scarce and real ones rather than the paper and printable ones. The question is not whether monetary change is coming, because the data says it is already here and already unfolding. It is simply whether you are positioned on the right side of that change or the wrong side, and the honest answer to that question depends entirely on what you own right now, and whether what you own is the kind of asset that rises when governments inflate their debts away, or the kind of asset that gets silently destroyed by that process. If you want to go deeper and see specifically what I am doing with my own money in response to everything we discussed today, that content is in the premium members section with the link in the description below, and I will see you next week. Take care of yourself and take care of your money.